And welcome everyone to this edition of Contractor Conversations. I'm your host, Luciana Turner, and today we have with us Mr. Dewayne Williams. Welcome to the platform. How are you doing today?
I'm doing well. Thank you for having me.
Thank you for joining us today. You know what? I was actually referred to you because I'm in a book club, and then I
Okay.
popped into one of your TikTok lives, and then I was in your training in the book club. And I'm a compliance officer, government
Okay.
contracting, and I stumbled into doing taxes while I was in college, and then by virtue of default of the compliance audits, I did the compliance audits on the tax side and company structure and all that stuff. So hearing you speak was refreshing because
Okay.
people do not talk about compliance enough. So I've been looking for somebody who would talk about taxes and structure from a
Okay.
compliance viewpoint because I love to complete the conversation, and we do not have enough complete conversations around this topic.
Okay.
So, with that said, you said something on your live yesterday, day before yesterday, and we're just going to start there and we're just going to springboard from there
Okay.
because nothing grits my teeth more than people who think they can use Cash App and call themselves a business.
Uh-oh.
I'm gonna just start there
Uh-oh.
because I
Okay.
know as a compliance person why you shouldn't do it, but I want you to talk about Cash App and business.
Perfect. So again, thank you for having me. And one of the things that I enjoy doing is kind of, helping people kind of connect the dots when it comes to perception and things of that nature. And when we're thinking about Cash App, most people don't understand that Cash App is not a business-to-business transaction. It's a person-to-person transaction. So whenever you are running a business and you're allowing someone to pay you on Cash App, they're actually paying you and not your business. And I think that's where a lot of people kind of confuse it. And then even more so when we take it a step further to look at one of the things that many business owners love to do is say, hey, where can I go get funding? And when they submit their bank statements to the financial institution won't give them credit for Cash App payments because it's not a business to business transaction. There's no way that you can actually determine that that Cash App was for a business service because they're sending it to your personal Cash App.
But I have the business version of Cash App.
Right, but it's still, again, it's still seen as a person-to-person transaction, not a business-to-business transaction. And even more so, a lot of times business owners, in my experience, have used Cash App as a form of quote unquote hiding their money, hiding how much money they actually receive. And unfortunately, they don't understand that Cash App will send them out, financial records showing how much money that they've made. And even if, you know, I, to take it even a step further, Cash App reports that information to the Internal Revenue Service as well. So whenever you do file your taxes, you're saying that, hey, I didn't make any money. The Internal Revenue Service has, you making $40,000 in Cash App.
You know what? I keep telling people reconciliations occur whether you
Hmm.
do it or the IRS do it.
Exactly.
You want to do it yourself
Hmm.
because when the IRS do it, government math is worse than Common Core. They never carry the one when it's in your favor. It's
Hmm.
it's when it's in their favor. The one becomes a three. I'm just being a little funny there,
Yeah,
but
yeah, yeah, yeah.
you want to reconcile it yourself, but just get in order.
That's
And
correct.
while we're talking about in order, I've been talking a lot on my platform about revisiting your structure
Uh-oh.
because what worked when you started
Hmm.
may not work now.
Okay.
So a lot of people say, I'm gonna start a business. For whatever reason, I'm starting a business. And you either start as a sole proprietor or the infamous LLC. Because everybody says become an LLC, but
Right.
you also want to be a separate entity. Now,
True.
after listening to you, because my compliance side always said the LLC doesn't make sense,
Okay.
if I want to be separate. But I was even advised to open as an LLC.
Okay.
So that's what I did, even though the 2 plus 2 was equaling 5, but I did it anyway. Um, Talk a little bit about the LLC
Mhm.
versus, and why people need to revisit their structure.
Very good question. So, in the most simplest forms, I ask people, this fundamental question: Do you want to be attached to the business, or do you want to be separated from the business? And then once we get to that level of understanding on what an LLC is and what it is not. So first and foremost, the LLC is a business structure allowed at the state level, which means that you cannot be taxed federally as an LLC. You're either taxed as a sole proprietorship, um, partnership, corporation, et cetera, et cetera. And the LLC started in 1977, and most people don't understand that each state operates differently. So whenever an individual opens an LLC, they are automatically classified as what's called a disregarded entity. If you look up the definition of disregard, it says to pay no attention to or ignore as being separate from the owner. And the Internal Revenue Service validates that by stating that, you know, if you file the business taxes on your personal tax return, i.e., a Schedule C, at the very top of that tax return, it says profit and loss from the business, but underneath it, it says sole proprietorship. The definition of a sole proprietor is the exclusive owner of a business entitled to keep all profits but liable for all losses. And if we understand the definition of liable, it would clearly say responsible by law. So you can't be separated from anything that has your name on it. So whenever you put that business on your personal tax return, any money that that business makes or loses, it passes through to your personal uh, tax return, which makes you personally responsible.
I want to stop right there. Pause. Hold up. So I go to the IRS. I get an EIN.
Uh-huh.
I get my trade name. I file with the state. I
Mhm.
open up LT&A. I'm
Mhm.
conducting business under my business name. I go file my taxes. I think I'm doing this great and powerful, wonderful thing. And what the IRS basically says is, you should have just did all that under your name because that's how I'm treating you.
Indirectly, and they're very clear, right? The IRS makes no distinction. It and even before people go get an EIN, the IRS says it very clear. Before you get an EIN, you should have already determined how you want me to view you, how you want me to treat you. And because again, one of our most common mistakes as business owners, we don't read. Whenever you do get an EIN and you select LLC, the IRS, before you can even put any information about the business, the IRS says you have chosen a limited liability company. What is it? It tells you everything that the LLC is, but underneath it, it also says what it is not. And the IRS says LLCs are not incorporated and they don't file an articles of incorporation. To be incorporated, a business has been granted a legal charter, a charter legally recognizing it as a separate entity, having its own privileges, rights, and liabilities distinct from other businesses and persons. So it's basically letting you know that we don't see you as a separate entity.
You know what? My head is spinning because I'm an LLC.
Okay.
However, I have articles of incorporation. I have an
You have
operating.
articles of organization, not incorporation.
I actually completed separately articles of incorporation. I just never
Okay.
filed them with the state. And
Okay.
that explains why when I filed them with the state, because I'm registered in Maryland,
Okay.
they sent them back. Now the math is math, and why 2 plus 2 should be 4, and it was coming back as 5, because I
Okay.
should never have been an LLC.
Right, because again, LLCs are not incorporated. And if we really dig down into it, if you go onto the IRS's website under business structures and select
Mm,
um, LLC, the first paragraph talks about how it's only allowed at the state level, but the second paragraph says owners of LLCs are called members. The reason why they say that is because the intent of the LLC was to be an agreement between two or more people. That's why they say owners of LLCs are called members. The
mhm.
definition of a member is a person, plant, or animal belonging to a particular group. Under no circumstances can you be a part of a group by yourself. So the intent for the LLC is one of those where, it was, again, like I said, designed for individuals and businesses to do business amongst each other. It's sort of like an agreement between two entities or two people. And
Okay.
because you can't be in agreement with yourself, this is why you are classified as a disregarded entity.
You know what? This is why I tell my audience, if you're getting advice and it doesn't make sense, seek counsel somewhere else to make sure, because the advice I got, like I said, I was advised to do an LLC and it didn't make sense, but
Okay,
I trusted the person who gave me the advice.
of course.
And I trusted them to my own detriment because I was functioning like a corporation because I even have minutes, board minutes,
Okay.
all this other stuff. So I was functioning, operating as a corporation, even though my designation was an LLC. So,
And interestingly enough, right? So, if you ever watch a crime show or whatever the case is, the crime show, always says if you want to know who did it, follow the money, right? And since we're always looking for money, even the FDIC, right, the Federal Deposit Insurance Corporation, classifies an unincorporated association is defined as an association of two or more people formed to do, business. Again, it goes back to from a financial perspective, they're looking at it as two or more people. And the if we go back and study the history of the LLC started because there was this group of brothers, the Hamilton All Company. They were wanted to do business, if I'm not mistaken, in Peru. Um, but basically, it was called the Limitada, and they want to do business elsewhere, right? So they were looking to see how can we do business overseas or in another country or wherever the case is, and kind of limit our exposure. And that's why it started there in Wyoming in 1977. And in fact, most states didn't even accept the LLC until the years between 1992 and 1997. So again, it's kind of one of those things where when you don't understand the intent of it, we can be playing a game on a
yeah.
soccer field, and the world of business is playing on a totally different soccer field because we're operating thinking that we are one way and we're not. So, um, for me, I always say if you want to separate yourself from the business, there's only one structure that allows you to do that, and that is a C corporation. Most people confuse a C corporation with a 60-story foot building or 15,000 employees. And in fact, the IRS clearly states a corporation is seen as a person.
I was talking, I homeschool my kids.
Yes, ma'am.
I was telling my children that businesses are entities, are persons.
Hmm.
And they were like, what? And I was like, yes, a business is a person, according to the government. And I
Okay.
went to the IRS, and that's what
Right.
it says. I
Okay.
went to the federal government, and corporation is a person. So when persons file taxes, corporations
Correct.
file taxes.
Correct.
So, completing the circle and completing this conversation, that just shows you good, sound, wise counsel makes a huge difference.
Hmm.
So, going back to filing the taxes
Okay.
as an LLC, hiring employees. Now, you're
Okay.
running all this unintentionally through your 1040.
Okay.
Now, I remember there was this gentleman, he had a farm. He was running all his income through the farm and he wasn't paying himself.
Okay.
Now, the IRS redistributed the income from the 1099 straight to his 1040, then retaxed him, froze his accounts, and just he was just in a world of hurt.
Okay.
Now, I know that you have to give yourself some type of payment through your company. You just can't act like you don't get paid.
Okay.
Am am I right or wrong?
All right. So, and I'm glad you said that, right? So I think that's one of the biggest misconceptions. Because whether you pay yourself or you don't, you're still responsible for all of the money when it's left. So
Right.
what I mean by that is, if you fill out your business income and losses and your income and expenses, I'm sorry, on a Schedule C. So let's just say that your company did $50,000 in revenue and it had $30,000 of expenses. Well, whenever that $20,000 ends up on line 31, it automatically passes through to your 1040. So this is why single member LLCs can't issue themselves a W-2, because W-2 income is on line number 1. Business income is on line number 8. You can't have the same number on both lines because it leaves from line 31, passes through your Schedule 1, and then the Schedule 1 puts it on line number 8. So when you add line number 1, which is your W-2 income, if you worked at like another company, because that number is already placed, that's your income. You That's what you're responsible for. That's what you're going to pay taxes on, et cetera, et cetera. So that's why you can't issue yourself a W-2 or a 1099 in that case, because you're automatically going to be responsible for that money once you finish doing your income and expenses.
Wow.
And
So,
then line number nine of your 1040 says, add lines 1, 2, 3, 4, 5, 6, 7, 8, and 9. This is your total income, and that's what you're taxed on.
wise counsel, because whoever taxes gave him some bad advice, and he didn't have any income on his 1040.
Okay.
On his 1040, everything was on the 1099. And when the IRS finally caught up with him and shifted the income onto his 1040 where it
Of
belonged,
course. Hmm.
and then they decided to use the overlook look back period and just look back over his previous years,
Hmm.
they wiped his bank account out and took him into a negative.
Yeah, and so here's the thing, right? So and I want to kind of like give people some sort of sense of peace when it comes to the Internal Revenue Service. As
Hmm.
long as you owe the Internal Revenue Service, the Internal Revenue Service is fine, right? Because they're gonna remain open, right? People think that the Internal Revenue Service is the boogeyman. No, you just don't
Right.
understand them. And their job is to make sure that people are compliant. And what the IRS has to do is substantiate the income, substantiate the expenses. Prime example, one of the things that a lot of I see a lot of business owners do or tax preparers do is they put a lot of money on the contractor line. Hey, I paid my cousin, I paid everything, I paid them as a contract. Well, whenever you pay a contractor, they are supposed to be issued a 1099. Well, you as a business owner are supposed to send in the IRS a 1096. That is to show all of all the record of all of the 1099s that you issued out. So here it is. You have $20,000 of contractor pay, but the IRS is saying, well, who you paid? And then that's where whenever there's an audit that's coming up, the IRS is supposed to substantiate that by saying, let me see all of the 1099s that you issued. And when you can't prove that, then the IRS say, well, I can't give you any credit for that expense.
Okay. So we're going to go back and complete the conversation around structure.
Okay.
How often should a business review or revisit their structure? The LLC worked in year one.
Hmm.
we're in year 10, we're now making $1 million a year, or
Hmm.
we want to scale up
Okay.
to start making or restructure. How often should a business look at your structure?
Well, contrary to
Or
popular
when?
belief, contrary to popular belief, most people think that the structure is based on revenue, and that's not an accurate statement. Because before you conduct business, you have to open the business, and the your revenue doesn't determine your structure. Because look at it in this case, you think that because you're an LLC, yeah, I mean, you think because you only make $20,000, you should be an LLC, and then next year you make 100,000, you should graduate to a corporation. But what happens when the following year comes and you're back to $20,000? Do you then restructure again to be an LLC? It's not revenue driven, and this is why most people fail. There's nowhere on the Secretary of State or the Internal Revenue Service when you open the business or get an EIN does it say, "Hey, how much money do you make?" No, it's literally saying, "How do you want me to treat you?" Your structure. So, how often should you visit it? You should visit it before you open the business. But I would encourage everybody revisit it today. And one question that you have to ask: do you want to be attached to the business, meaning that you want to be personally responsible for all of the business's income, losses, and deductions, or do you want to be separate from the business? You want the business by itself to be responsible for its own income, losses, and deductions. And that's the fundamental thing.
So what I'm hearing is you tell the government how to treat you,
Hmm.
and you are not the business. You're
Correct.
you, and the business is the business, and never the two should be
That's correct.
intertwined.
That's correct.
You teach people how to treat you.
That's exactly right. And how you tell them how you want to be treated, they're going to treat you accordingly.
Wow. Stop running your business like you're running a family. This is not your cousin and them. Family reunion.
One of the things that I've always tell business is never built on emotions, it's built on
Yes.
standards. And as long as you can remove the emotional side of it out of the equation and look at what are the business standards, I think people would fare out a bit better.
And there are a lot of bad coaching out there, and I'm going to put this PSA out there. When you hear your family came in and stuffed envelopes, that's a consultant. That's a coach. You hired them, put that, write them off, run away from them. Because I've actually severed a business relationship with somebody who was
Hmm.
telling their following that. No, that's not right.
So, well, let me ask you this question, and I know, you know, and I've access, and here's how I kind of help people, like, just look in the mirror. Do you believe words have power?
Yes.
All right. Words have power, words have meaning. Whatever we say and put out into the atmosphere, that's kind of what we kind of fall under. I hear a lot of times people say write off. The definition of a write off is to um, classify something, dismiss something as is insignificant or unimportant. I also ask people, are you a small business? Most people say yes. Well, the definition of small is to be of a size less than normal, insignificant, or unimportant. The definition of liability is to be responsible for something and to put one to cause embarrassment or put one at a disadvantage. And the definition of limited is to be restricted in size. All of those things are not geared towards helping you build a legacy. What I educate my clients on is how to reduce their tax liability, meaning how do you reduce the amount of money that you actually owe the IRS? It's not about dismissing any of your business as it's insignificant or unimportant. It's about how do you legally and in compliance with the IRS standards reduce that liability.
Mhm. I love this conversation. I will cry. Okay. But you know what? I love this conversation. It's refreshing because there's too much bad information and it's
Yes,
too
ma'am.
many incomplete conversations being held.
Yes, ma'am.
And I have a coach that I was following. She did a live about, and this is a great segue, about, we have this famous term, leaving money on the table. And everybody has been running around here talking about you're leaving money on the table and you don't want to do that, until she looked up the term and what it really meant.
Okay.
And what the term means is it's a disadvantage or a bad deal that you don't want.
Okay.
And she said when she found that out, she actually renamed she renamed some things in her business. She was like, you really do want to leave it on the table. So we're running around here using terms and using words. We
Mm-hmm.
don't know what they mean.
Mm-hmm.
Because I even tell people the SBA determines small business by NACE codes. And in those NACE codes, it's determined by revenue, not
Mm-hmm.
size. And even
Mm-hmm.
when they use size, it's by the number of employees. Once again, it's not determining by your significance. It's
Okay.
determined by employee, head count, or revenue, how many
Mm-hmm.
millions you're making, which
Okay.
is why you're talking about I'm a small business, it's just me. And they're talking about they're a small business, they only have revenues of $10 million. You're not even
Mm-hmm.
talking the same language.
That's correct. And I think we oftentimes try to, the English language is very interesting because we have one word that can mean 15 different things, and it can become confusing, right? You know, let me give this particular perspective. The SBA is the Small Business Administration. The S in S Corp is for small business. Whenever you start surrounding yourselves around those terminologies, one must ask themselves, how can I take my big idea and make it move when I'm constantly calling myself small, or I'm going to institutions that only deal with people who think on a small scale? At the end of the day, your job is to make sure that you put yourself in the best position to win. You cannot possibly win if you're always used to taking losses. Whenever you hide your money from the Internal Revenue Service, you hide your money from financial institutions and other investors, because in your mind, you're saying, I don't want to pay. Well, you're doing business for the wrong reason. Your job as a business owner is to make money. Whenever you continue to dismiss things as insignificant, taking losses, you can't possibly be in business for the right thing. And the IRS is very clear. If you continue to take losses and loss after loss after loss, they're going to classify you as a hobby and not doing business for a profit.
I love that. It's the reframe. I have a coach who says you have to stop thinking and acting like a consumer when you
Hmm.
go into business. And most people go into
Absolutely.
business thinking and acting like a consumer, and then wonder why they're not making any money.
Well, that's because those are the same individuals who think, you've heard the terminology, right? The sky is the limit. We've all heard it.
Hmm.
Well, when you tell people the sky is the limit, and then, the next conversation you say, reach for the stars, how can you possibly reach for the stars if the sky is going to continue to be the limit? And it's the way that we approach things. It's the way that we approach things, the way that we think. And when we don't allow ourselves to be educated, and when we don't allow ourselves to really dig deep, to figure out why did we start that business, chances are we're going to find out that the people who struggle are the same individuals who don't have a business plan.
I love it. I love it. So, what are three things you would tell anybody who wants to course correct? They're
I would.
saying, I recognize I made some missteps and I need to course correct.
So the first thing that I would say is, number one, we have to go back to the plan. Why did you start the business? What is it that you intend to do with the business? What is that you Where do you see yourself in 3 to 5 years? And as silly as that may sound, but it's really about rethinking why you started the business. And once you understand why you started the business, by really writing down the business plan, I think what you will find out is, do you want to be attached to the business or separate from the business? So number one, I would say go back to the plan. Number two, um, I would say that when you are looking to course correct, you have to ask yourself, where do you want the business to be in 3 to 5 years? If you know that you want the business to grow, start to figure out the things that are limiting you from growing. And that is, um, make sure that you have a team of people around you. Whether or not you can afford to hire an employee or a contractor, at least hire um, some sort of advisor, a coach, a consultant that can lead you down the path to the journey of success, in my opinion, based on your vision and your goals. And then last but not least, I would say if you want to course correct, understand that your family and friends are just your family and friends. Your customers are the people that pay you.
I love it. I was talking about this on my live Tuesday. Your family and friends are there to protect you and to love you. You need a business community to help you walk and grow. And it took me a while to realize that because I was bouncing business ideas off of my family and friends, and the advice they gave me was terrible. I had to
Well,
get some business friends that I could bounce business ideas off of. And then when I got that community, I saw a difference in my business.
we tend to, as people, right? We tend to go ask a bunch of people who have been employees their entire lives on business decisions. And it's not that they love you any less by giving you, maybe inaccurate advice, is that you're just asking them advice and they can only comprehend it from the employee perspective. You need to put yourself around other business owners who have been where you're trying to go for their advice. You and so and so, y'all both trying to make it together. No, you need someone who's been exactly where you're trying to go to be able to tell you, hey, how did you get there? Oftentimes we say, man, and when you make it to the top, don't leave anyone behind. Why is that the narrative versus when I make it to the top, let me give you the directions on how I got there, and if you want to meet me there, follow those directions.
Because everybody don't want to go.
Ah, now we're getting
People
somewhere.
are content where they are. And I learned that
Exactly.
I was so frustrated with somebody, and I was talking to I actually paid money
Hmm.
to speak to somebody, and I was just venting to him about different things. He said, one, you're trying to pull people with you that don't want to go. Where to go?
Hmm.
He said, two, you're talking to your family and your friends, and they're your family and your friends. Let it go.
Hmm.
He said, three, you spoke to a coach that you should have hired, and they told you to fire your first team, and you should have fired them. Well, why ain't you listening to him? I was like, oh, you see, now you're hurting my feelings. But I needed my feelings hurt. That was the beginning of my course correction. I needed my feelings hurt. I, I mean, that was a powerful and productive conversation, and it was
Yes,
the
ma'am.
best money I ever spent.
Yes, ma'am. And again, you want somebody that's just gonna, that's gonna hold you accountable to the
Yes,
things that you say that you want, right? Anybody can just make you feel good, but feeling good doesn't do anything, right? We need to be able to look in the mirror because the reason why most people are not successful is because they don't want to admit that they're the reason they're not successful.
yes.
It's no one else's fault, right? You can't blame the tax person because they did something wrong when you didn't, you know, when the first thing that most people do is that, man, I just don't want to owe, see if you can give me a refund. So they're doing exactly what you asked them for.
You know what? I'm glad you said that because I wanted that segues us into a tax question I have for you.
Okay.
During COVID, I call it the Great Reset. So whenever I
Mm,
say Great Reset, I'm talking about COVID. I had a friend who was trying to apply for PPP,
okay.
and we don't anyway. Um, because she had always filed her taxes the way she filed it, which was to get a refund. However, when she filed for the PPP, she put her actual income down because she wanted to get the maximum amount. She used somebody else to help her do the application because she knew I was going to tell her to make it match.
Okay.
It got rejected
Okay.
and she couldn't fix it. And she finally got flagged. It came back as fraud because
Okay.
she kept refiling it. She kept appealing and it finally got flagged as fraud. Can that get fixed? One, can that be fixed? Can people magically go back and fix their taxes to make it accurately reflect their businesses?
So the IRS do allow people to amend their tax returns, but if we're going to use the context of the PPP, um, here is the biggest miss I would say that people ignore. The PPP stands for the Payroll Protection Program. The Payroll Protection Program was the government saying, hey, when COVID happened, the government can't afford for everybody to be unemployed.
Mm-hmm.
So, hey, companies, since we are always bailing you out, I need you to do me a favor. If you keep your people employed, employees employed, I'm going to give you 2.5 months of your payroll expenses, and I'm going to allow that to be forgiven. And at that moment, that's where the light bulb should have gone off for many people. Payroll is when you actually pay someone and they have taxes taken out of their check. The reason most people were flagged is because they either submitted 941 forms or did not submit 941 forms. And the IRS is saying, well, wait a minute. You didn't claim all of these payroll tax dollars, I mean, these payroll dollars before, but now all of a sudden you got these payroll dollars. And it's like, wait, something's not adding up. And because you don't even have the documentation of showing that, we all companies have to pay payroll taxes. Whenever the IRS gives people a credit or a refund back on payroll tax dollars, that's because they've paid into it. They can't give you something that you didn't pay into. And people were classifying 1099 people as employees, and that wasn't the case at all. That's why the IRS said you could not use it for contractors. And that's where a lot of people got hung up. And then if we kind of follow the timeline, not only did they allow people to do the PPP once, they allowed it to do twice, but then the IRS came back and said, if you are an independent contractor, meaning you work for yourself, it's only you,
Mm-hmm.
I'm going to allow you to get the $20,000
Mm-hmm.
twice and let it be forgiven. But people were trying to double dip.
Okay. That's PPP in a nutshell, people. You want to believe me? There's a
Uh-huh.
tax expert. Okay.
And it's the same thing with the employee retention credit. So what the IRS did was last year, or later last year, the IRS allowed people to basically say, "Hey, I applied for this employee retention credit by mistake, by accident." Meaning, tell me if you tell me now that you allowed a company to bamboozle you, if you will, into thinking that you qualify for this employee retention credit, tell me that you did it. And people have to ask themselves, well, do I have so many people calling me about the employment retention credit? Easy, because the PPP is public data. So you had companies that found everybody who got PPPs and said, hey, because you got a PPP, you do qualify, or you may qualify for the employee retention credit. Why? The PPP was for employees. So since you paid taxes, the employee retention credit said, hey, I'm gonna give you $26,000 per employee. And then you got people trying to double dip again. And all the IRS is saying is, y'all keep sending me all this information about money that I should give y'all, but y'all don't have any money that y'all paid into payroll taxes.
The reconciliation was reconciled.
Reconciliation.
The reconciliation reconciles. I can have this conversation all day, but I know you
Yeah,
have the stuff that you need to do.
I love it.
So we have the 3 points for those who want to course correct. I want you to leave the audience, with 3 things to remember about taxes
Hmm.
for their business.
All right. If I can give anybody advice when it comes to taxes in business, I would say number one, the IRS is not the boogeyman. Number two, when you hide the money from a bank, when you hide money from the IRS, you also hide it from a financial institution. And number three, you cannot possibly be separate from something and take responsibility for it at the same time.
This is a refreshing conversation. And I am quite sure we're going to have you back again
Thank you.
because we have to continue the conversation around business and taxes. And um, I know you've talked about the FinCEN
FinCEN.
regulation, and that's a whole topic in and of itself.
Hmm.
So that people can understand what it is they're being asked to do and why they should do it.
Agreed.
But that's a whole separate conversation.
Yes, ma'am. I'll
So
be more than happy to come back and talk about it. Okay.
hopefully we can talk about that in September. So,
We can.
all righty. Thank you. So.
Thank you so much.